Welcome back to Trading Day at lunch. Let's take a look at the markets because, of course, right now, I'll just mention to you, we're up 0.8%. Chris Conway joins us from the Australian Stock Report for more. Chris, good afternoon to you. A really nice gain for markets today. I guess that was always going to happen if the Fed did keep rates on hold overnight.
Good afternoon, Ingrid. Yes, it's certainly positive across the screens today. It's very nice to see. I think traders can begin to get a little bit excited about what we've seen. The Fed and the Bank of Japan didn't really do anything to upset the apple cart. We had a sell-off leading into the central bank decisions. And we've got some nice technical signals happening in the market as well. I'm actually quite bullish in the short term and happy to take on long positions at the moment. Really?
Okay. And is this just because we've had those central bank meetings, Bank of Japan, Fed out of the way?
Exactly right. The analogy I used in a note to clients this morning is, to me, this morning was like waking up on Saturday morning. It's the longest possible time before you have to go back to work on Monday morning. This morning is the longest possible time between now and the next rigmarole that we all go through leading into the next BoJ and Fed decision. So the market actually has some clear air, I think, to rally into. Like I said, couple that with the fact that neither central bank did anything to upset the apple cart. Indeed, they probably created the opportunity for a rally to ensue. And we've got, a nice technical signal, and we are coming off some lows. So if markets can't get going now, I struggle to see when they will get going.
Okay, so we might get going now. Obviously, we're at 5,381, so we still can't get above that 5,400 level just yet, though we've come a long way from just a couple of days ago. But going forward, as we head closer to the next Fed meeting and as talk starts to ramp up again and we head closer to a US presidential election, do you expect to see markets around the world take a hit and us following suit, of course?
Look, it very much depends on the economic data and what changes between now and the next Fed decision. But I think markets are pretty comfortable with the fact that the Fed will go in December. I don't think it's above that 70% threshold yet, but it's very close. I heard another analyst saying this morning that I think there's only been 2 times in recent history when the Fed has raised rates with that probability below 70%. But it seems like the market is used to the idea of the Fed going in December. So if everyone's used to it and prepared for it, hopefully the impact won't be so bad, and hopefully they can just fire it off like they did last year. And again, you and I have spoken about this, Ingrid. There's a lot of volatility, or was a lot of volatility in the lead up to December last year. Post the actual decision, markets just got on with it and actually pushed higher. So with everyone seemingly knowing that it's going to happen in December, hopefully it's a similar sort of course of action. We may see some volatility, but once it drops, well, we all just get on with it.
Well, I'm interested in your move in BHP, because you said you've added to positions on BHP this morning. Obviously, the stock's rallying today. It's up about 3% now. And now we're seeing iron ore futures, Dalian iron ore futures up 4% in China. And obviously BHP has a large exposure to that as well as oil. So why add to BHP now? I mean, in terms of seeing more upside from today?
Yeah, so we bought it first thing on the open this morning, and we're already up maybe 20 or 30 cents on the position. It's a fairly aggressive position, fairly big position size. With a fairly tight stop down at 19.50. And look, the reason for it is, again, it's all related to the Fed. With the Fed not moving overnight, we saw the greenback come off. That, of course, is good for commodities, hence probably why we're seeing iron ore futures up today and why we saw oil up overnight. But, throw into the mix as well there the fact that oil, anytime oil is traded back down towards the $42, $44 zone in the recent past, I've thought it was a buy. It's recently bounced out of that zone again now. So just across the board, everything is looking pretty bullish.
Okay, I want to talk retail space because Premier obviously out with numbers today, and it's a bit of a disappointment with the share price. It fell quite significantly at the open. It's now down by about 4.6% at $15.75. This is often seen by the market as one of the better retail plays. So what went wrong today? Because obviously net profit did fall short of forecasts.
Yeah, so this was something that I spoke about with Nadine on Monday morning, and it was really about the Brexit decision and the uncertainty that has thrown up. We all know that the key brand for Premier Investments is Smiggle. I think through this half, it's going to be the largest revenue generator for the group, the Smiggle brand. And anyone who's following the company would know that they've had quite aggressive expansion plans moving into the UK. They had forecast that by the end of this year they'd have 100 stores rolled out in the UK, and the results today, they provided some commentary and outlook. That's now been revised down to 85 to 90 stores. So a 15% decrease in the store rollout, and I think that's a symptom of some of the uncertainty that the Brexit decision has thrown up, and I think the company alluded to that. It's very interesting though, in almost the next breath they said sales at the Smiggle UK stores have actually been stronger post the Brexit decision as compared to pre the Brexit decision. But, you know, it's obviously a forward-looking thing with the company deciding, well, let's just hold back for the moment. Let's see what impact the Brexit decision will have. And obviously that's guiding their, how aggressive or otherwise they'll be with their expansion plans in the UK. So I think that's the thing, because Smiggle is now such a huge part of the revenue pie, that has investors a little bit spooked. But then again, you know, it was down 8% off the open, and I think you just said it was down now 4%, so it has rallied off the lows. People are still seeing some value there.
Yeah, I mean, would you be tempted to buy in at these levels? Because as you said, a lot of it, if it's Brexit related, you know, that should wear off sooner rather than later, and some of the issues that they're facing are expected to improve going forward. So, and they've increased their dividend as well, which always helps give the market a bit of a boost. So would you see this as value?
Yeah, I think so. I would have been very happy to pick it up at near 15s on the open this morning. But yeah, look, I think this sell-off offers value. I wouldn't bet against Solomon Lew. He has such an excellent track record. They've just ticked over $1 billion in revenue. The growth numbers that they're throwing up are pretty exceptional. Their like-for-like sales, you know, just to compare it to a Myer or a David Jones, beat those competitors, although, of course, they are slightly different competitors, but in that retail space. So there's a lot of metrics to like. And as you rightly say, the Brexit issue that has been thrown up will pass in time. They also have some pretty aggressive expansion plans into Asia, in Malaysia and Hong Kong. And whilst it's very early in regards to the Malaysia story, the numbers were probably even better than I expected on the early evidence. So there's still a lot to like.
All right, Chris, we'll leave it there with you, but appreciate your time as always.
Thank you, Ingrid.
Chris Conway there from Australian Stock Report.